Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 27th of September 2019 and we've produced two videos today. This one relates to the dramatic slowdown in the growth of the Chinese economy and what that means for the rest of the world and its effect on gold and silver prices. The second is a Brexit update where we interviewed controversially Greg discussing why the UK Supreme Court judged against the British government and compelled Parliament to reopen. This podcast video refers to China and why we all should be concerned. So let's investigate. We have produced many podcast videos on China, frankly, because China is the second largest economy in the world, with the US being the largest, and since 2008 has truly been the world power engine of growth, which has, some would argue, prevented the world from going into global recession. Such is the importance, size, and magnitude of China's economy that Gary Hufbauer of the Peterson Institute for International Economics estimates that a 1% point fall in Chinese growth would probably take approximately 0.2% of global growth. Now, many ask, why is this a problem? Well, if you consider that as early as 2007, China's growth rate was some 14.2%, and in 2018 it was just 6.6%. That is some significant deterioration. But the concern is that 2019, it's still getting worse. Now, in the 3 months to March on a quarter-by-quarter basis, the Chinese economy grew by 1.4%, compared with 1.5% the previous period, 1.6% the period before that, and 1.8% before that. The second quarter of 2019, GDP growth picked up to 1.6%, causing the year-on-year growth rate to come out at 6.2%, which is still down though from 6.4% year-on-year growth from the previous quarter. Well, it's been reported today that China saw industrial output grow at its slowest pace since 2002 in August, with exports falling by 1% from a year earlier. The economy as a whole is expanding at its slowest pace since the early 1990s, and these figures were accompanied by China's premier announcing that it would not be easy for the country to sustain growth rates of above 6%. With the trade war, with the United States, domestic issues, and a severe attack of swine flu, with over 1 million pigs being slaughtered, causing pork prices to rise by more than 46%, and eventually, it is envisaged, by as much as 80% soon, being blamed. Back in June of this year, the 25th of June to be precise, the US Congressional Research Service published a document for members of Congress entitled, quote, China's Economic Rise, History, Trends, Challenges, and Implications for the United States. Unquote. In this document, it highlights that the IMF has predicted that China's growth rate will fall to 5.5% by 2024, with China acknowledging, quote, the need for China to embrace a new growth model that relies less on fixed investment and exporting, and more on private consumption, services, and innovation to drive economic growth, unquote. Now, we attach a link to this document in the description box below, and whilst it's quite technical, it does make quite interesting reading. Now, To help overcome this falling growth and deal with the adverse effects of slowing export growth, China has introduced a series of measures to boost liquidity in the financial system and has reduced taxes. It has also allowed the yuan to basically depeg from the US dollar and fall below that much-tracked 7 yuan to $1 ratio, though today it is standing just above it at 7.12. Now, concerning though this is, there is an interesting factor which has gone largely unreported and certainly not headlined in any major way. Although the trade war between the US and China has been going on for more than a year, the effect of these tariffs has been reduced by a lowering in the value of the yuan, and China exporting to the US via other Asian countries. Now, even though, and this is the important part, even though China's exports are down, their share of global exports has actually grown, indicating what a worse condition other countries are in compared to China. So where does this leave us, and particularly for those of us interested in the precious metals space? As after all, one of the reasons we look at China is because it is one of the largest buyers of gold and silver in the world, which undoubtedly has an influence on price. Well, at the time of writing this podcast, we can see that gold is currently standing at $1,488 and silver at $17.36. Now, we admit we're repeating well-versed arguments for this, not least being the substantial rise in the value of the US dollar, with the spot dollar index standing at 99.1. We have also witnessed quite a considerable rise in gold and silver prices this year, and so a pullback is only to be expected. However, there are other issues which we need to concern ourselves with, and especially silver. With 67% of all silver mined and 57% of the total annual supply of silver being used for industrial purposes, shows us how important industry is to this precious metal. So if the world is actually experiencing lower manufacturing growth, lower export growth, lower GDPs, then it goes without saying that the use of silver is going to decline. Or at least the demand for silver is going to decline, until at least the world economies pick up. Now, with China being a major buyer of silver also witnessing falling growth rates, what is going to help this precious metal? Well, it has had significant benefit in the past 12 months because of the rising price of gold, and because of things such as taxes imposed by the Indian government on gold, which have seen much larger purchases of silver from India. However, that said, India cannot totally make up for the falling levels of demand from the whole world. In addition, buyers of silver for monetary purposes, which is where silver bugs hope the slack would be taken up, as a result of the fear of an economic collapse or stock market crash, has also so far helped the precious metal. But it has helped its older cousin gold much more. And in our opinion, until gold becomes way too expensive for the ordinary man in the street, silver will continue to lag gold, at least for a while. But the gold price is also falling, as geopolitical concerns do appear to be waning. So, China does have a significant impact on the price of gold and silver. And in our weekly update tomorrow, we shall discuss further the recent fall in precious metal prices. So, what do you think? Is China's economy going to hell in the handcart? What effect will this have on the rest of the world? Will the US manage to avoid recession, even if the major economies face one? And will this prove more detrimental to gold and silver prices, as opposed to the acquiring of these precious metals for monetary purposes? Do share your thoughts. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.
Glory, glory, hallelujah.